everyone, thank you for joining me. This is episode 7, talking about how much money you can make off of rental property. This topic was brought to us by one of our friends on YouTube, DDog0104, posted about 18 hours ago. And his question was, could you please do a video on how much money someone can actually take home each month? And that's the gist of the question. He kind of went into it with an example and kind of asking, is this making money, or is it just kind of paying for itself and just a little bit left over to pay for repairs and all that kind of stuff. I'll let you know right off the bat, the stuff that I'm buying percentage-wise is very profitable, even though there'll be people who have much higher rents in their location. Most likely they're not buying stuff for as cheap as I am here either. Now, another thing to keep in mind, I've said this in a past video, how much I'm buying things for. In our case, we're going to use a $12,000 house as an example. That is not something that determines the actual value of the house or the value of the area. A lot of people are getting confused. They're thinking that I'm basically just whistling, walking down the sidewalk and see a house for sale and inquire within. But I'm doing a lot of different stuff to end up with these houses as cheap as I am. A lot of times it mainly involves solving somebody's problems. Problems that other people aren't willing to solve, don't know how to solve, haven't asked. And a lot of times, too, the biggest thing that you can do to make something happen, a lot of people just sit back and just wish something would happen, when all you usually need to do is just ask. One of the best deals that I bought, the person just had not been approached yet, and it blows my mind that they had not been approached. Now, after I bought it, I had all kinds of people telling me, well, I would have bought that house, and they were almost mad about it. But they didn't, and that is the biggest thing. We go back to the last video, you got to take action. So back to this example, and again, this all might not apply in your area. This is just my example of how much I'm making off of some of this stuff. And these numbers, they're not all exactly precise. This is really $7.60, this is really $16 in some sense, but I'm rounding things up. I kind of generalized with the tax down here, but you're going to get rough ideas. Because in real estate, it's each year a house can end up being more or less profitable depending on different things that can happen. It's more of a long-term thing, and just whether or not the numbers make sense long-term. I don't analyze it kind of, each year. So in the case of the $12,000 house, and if you haven't seen those videos, go check them out. Link will be in the description below. I paid $12,000 for that house. I then paid roughly $15,000 on the renovation. Doing it all myself took about a year and 8 months. It took a long time, but filming the videos that I film really slows things down. But for me, it's worth it. Those videos also make money, so that's kind of a bonus in all this. Even if I had zero income from YouTube, I would still do what I'm doing. I started all this before I had a YouTube channel, and I would continue it if YouTube disappears. It has nothing to do with YouTube, it's just another aspect of how I make money off of doing this stuff. So that house rents for $600 a month using a property manager, so I am not the active landlord. So once I finish that house, I step back, and at that point I'm basically just an investor. I'm not fooling with any kind of day-to-day stuff. I, on occasion, will get a call on a place, and then they say, do you want us to deal with it, or do you want to deal with it? Most of the time I'm going to deal with stuff. In one of my houses, I fixed a plumbing issue. It was $20. It would have cost hundreds if I would have had somebody do it. Had a plumber do it, and then I had the advantage of going to the house, kind of seeing how things were going, and felt good about what I saw and was able to come out of there happy. So in my case, I kind of like being the one that goes and fixes stuff because I can find out kind of what's going on. And I found basically that the property manager that I'm using is very good. We'll go over property managers later. But don't be scared by the fact that you have to pay the property manager. You're going to make money off the property manager if you get a good one, because they're going to get houses rented quicker so you don't have lost rent. They're going to be getting things ready for those turnover times where they're going to get somebody else, find somebody else before the person leaves. They're going to be a better landlord than you. That's their business. My business is buying houses and getting them ready to turn over to these people. That's the way I'm looking at things from here on out. Now we're going to go over the overhead, which is the cost of doing business, and you're going to find that mine is very low. But it's just my numbers and the way I'm going about stuff. I'm paying the property manager 10%, so that comes out to $60 a month. Annually, they get $720 from me. The property tax on this house is $92 a year, which comes out to less than $8 a month. The insurance is about $200 a year, which comes out to roughly $17 a month. And that doesn't sound right to me, but I guess it is right. A total of $85 worth of kind of directly related to the house overhead. So that comes up to $515 a month that I end up with. Now, I have to pay taxes. I'm just kind of generalizing state and federal income tax, just saying roughly $1,000. One thing though, it's a beauty within real estate, rental income and all that, is for one, it's passive income. It's not subject to basically self-employment tax. So I'm not paying Social Security and what is it, Medicare, Medicaid, whichever one it is. I'm not paying that. So that's like the thing your employer is covering. So on your paycheck, it's probably about 6%, and then the employer is paying about 6% more, and then the other is 1 point something or another. So it comes up to around like 13 or 14% that you're not paying because it's passive income. It's not your laborers aren't doing it. It's an investment getting a return, so you don't have to pay those taxes. And that is the wonderful thing. For every dollar that I make, I am paying less taxes on it than the dollar someone is making from their job. So that is one of the huge benefits of doing it, and I don't have to spend time actually making that money. So I'm spending less time making more money. I almost feel bad saying it for the people that are kind of watching videos like this and going, especially ones that have missed out on the opportunity. You haven't missed out on the opportunity. Colonel Sanders didn't get KFC going until he was a very old man. So don't think that you are too old to get stuff going, because it's not just about you either. Who do you think is going to end up with all this real estate and all the money that it makes? It's going to be my family. So I'm going to give all this to them. When I keel over, they're going to be thankful that Daddy spent all his time working on dirty houses. But back to the example. So we're at $515 a month, and that was $6,180 a year. Taxes of roughly $1,000 per year. So that drops us to $5,180. Allow me to turn the board around for the big reveal. Then we might spin it back around. There's your numbers. $5,180 a year cleared, $430 a month out of $600 rent, and that is roughly a 20% return. Now, if you do all this math, it's not going to come up exactly 20% because you don't know all of the kind of variables, but this is just rough numbers. We're not talking exact here. Now, what am I leaving out in this? I'm leaving some stuff out because all that stuff you never know. With that said, when we're talking about things like maintenance, it's just, for me, it hasn't been a huge issue. I've had one of my houses I've been renting out for 4 years, roughly 3 or 4 years, and I have replaced a window screen, and that is it. Other than that, it's basically the same numbers on here, except the property taxes are higher, and it's not under management. That one I manage myself. But until that person goes, there's just no reason for me to change it over. They've been living there that long, and it's just no issues. They don't call me. It's nothing like that. They're just perfectly fine, great renter, lives in the place, and they just asked if I could fix the window screen, which had, I think, a dog went up to it and basically scratched it. And so I just went and did that. So where was I at? Let me jump to the things that I'm skipping. The reason I said that this income tax is rough, tax filings. Each year when you have a rental property, you have to do separate filings for the rental properties. Each one of those filings costs a certain amount. So that's an additional cost, but that cost is a tax write-off the following year. I do have maintenance throughout the year, but that's what I was just talking about with the other house. I replaced a window screen in 3 years. I haven't had to do anything else. There was one other time that there was a problem with the curb on the street. We had this incredible rain, like we're in a rainforest, and the curb broke, water flooded the yard, got inside the house on a concrete slab, so it's low. So I had to get in there and help the tenant. I know them personally. and we had to, like, it's carpet directly on a concrete slab, and we had to roll all the carpet up and then suck all the water up and then set up a bazillion fans and get everything dried out. So that turned out, since I know the person, it turned out to be kind of a semi-funny, fun thing, just hanging out doing some stuff. But you know, stuff like that does happen. I'm not going to try to act like I don't do anything. You've seen my videos probably on Homemade Home channel. I'm working hard for the money. It's just the time I'm putting in as an investment into the benefits of not having to do the work long term afterwards. You've got depreciation on a house. So there's a certain amount you can depreciate on the house each year, which comes off of your taxes. So basically, that number right there, which I'm sort of referring to as my net income, it actually just keeps on going down. Depending on what you have going on, you can run this number all the way down to zero and even negatives and take a loss on places. So that does happen. For example, one of my houses took a loss on it because I didn't rent it until basically starting in the tax year, and there was more cost right there in the beginning of the year than the house profited, so it takes a loss and I pay zero taxes on the amount of money that I made because there were more costs than profit in that situation. But you can look into more of this stuff. You know, you can, in rental property, you can, I feel fun even talking about this stuff because I'm not super knowledgeable and clever in the way I can talk about all the super details, but again, I don't really care about them. I just look at these numbers. It's a common sense. It's going to make money. Buying places cheap, making the money each month. But there's basically ways you can get it almost down to where you're barely paying any taxes on this stuff at all, but you are making money off of it, and it's just because the way the taxes work, it's all legal. You just have to go and do it the right way, and you can pay very low taxes on this type of stuff. It's there's tax advantages of it, even if you pay the most taxes you can possibly pay on it. But then there's ways to really get that down. Other tax write-offs you can take are mileage, so that's like 52 cents per mile. So if you've got a place that's 10 miles away and you go there and back, you've got $10.40, if I did that math right, that you can then deduct from this. What else? I think that's pretty much it. I think a lot of people maybe overanalyze this type of stuff. This goes back to my last video where I talk about sort of basically the fear of why people don't do stuff. If you're in an area where you can do stuff at lower prices, I'm not talking maybe as low as me, but just lower prices. If the rent is outpacing, your costs, you're having a house is becoming worth more and more and more over time. You could sell it down the road. It's just, there is nothing like, this is not easy to achieve in other forms of investing. If you're doing this, you are really hammering it, and you're probably doing something that's risky. You're probably doing something that doesn't have insurance on it. This house has insurance on it. There are, of course, risks to real estate, but it is very few, in my opinion, and there's ways to protect yourself against all of the risk, most of it through just not being ignorant and doing things the right way, and that's really it. Everything is about just making those right decisions. But even in the end, walking across the road is risky, but you got to get to the other side of the road. That's the way I look at it with making money. I want to make it as easy as I can on myself, but you can never eliminate every single risk. But that's not something that worries me. You just do the best you can, hope for the best after that. What else would we talk about with this topic? That really is probably it. I just wanted to give a quick example of it, let you see that it is a beautiful thing. One other thing I guess to mention, this would be kind of the other house that I did a renovation of, a light renovation, is that brick ranch. That one I have a mortgage on that house. I think with the new tax code, the standard deduction if you're filing jointly is something around $24,000 or something like that, I think, right now. That, I believe, includes mortgage interest in it. So that's why people say, the tax code changes were good, and then some say it's bad. It really applies to people differently. Meaning that if you're paying a mortgage, there's a huge portion of your mortgage payment is interest early on for quite a long time. and you could deduct that from your income taxes before, but I don't think you're allowed to do that anymore. But with rental property, you can, because that is a cost of doing business. It's not your personal residence. So if you have a $1,000 mortgage and $700 of that payment is interest, you can write that right off. And then the remaining amount that is going towards principal, you have to claim that, because that is basically the person's buying the house. So that is income, even though it's going to the house. It's going towards the purchase of the house, which would be considered the basis, I guess. This is where I'm definitely stepping out of my comfort zone talking about this kind of stuff. I'm kind of a cowboy when it comes to a lot of things. I don't worry about every detail. I don't worry about, because it just doesn't matter to me. And when I say it doesn't matter to me, it's just, it gets handled one way or the other. It gets handled by an accountant at the end of the year. Again, I'm just looking at stuff. I'm making my mind up on sort of gut and common sense. There's definitely a lot of situations out there where you really do have to know what you're doing and take a close look. But when it comes to this, just buying a junky house, getting it fixed up and renting it, it's usually just a good deal, and it's something you don't want to be too afraid of. Just make sure you take the right steps in approaching it. I think that is where I will leave this video. Where are we at? Around 16 some minutes long. If this brings up any questions, if I'm leaving something out that is major, please leave it in the comments below. There's plenty of people that probably watch this video, other videos of mine, that have a lot more experience than me, and I welcome that. I'm doing these videos to learn, in addition to trying to offer what I know to other people. So I will put my foot in my mouth on occasion and say the wrong thing. It doesn't bother me. It's just the way it is. It's hard to talk and record yourself and have every second of it documented and get it all right. So correct me if I'm wrong. And if you want to offer kind of how this, run a scenario out of yours, if you have property yourself, run it out, kind of write it out and post that in the comments below. That'd be interesting. If you want to post your rough location, that'd be cool too, to kind of map out how things work in different places. Check out the links below. I have an ebook that I did on how I buy houses so inexpensively, and talk about basically the examples of houses that I've bought. Probably going to work better in places that have older parts of town. Check all those links in the description below. Check my other channels. Please give this video a thumbs up if you enjoyed it. Leave your comments letting me know what you think the topic on the next video should be. Thanks for watching. See you next time.